Rusia dan Ukraina kembali memberi dampak pada perlambatan ekonomi global. Harga komoditas pangan dan energi yang naik mengakibatkan turbulensi keuangan global, diikuti meningkatnya risiko stagflasi serta perubahan iklim. Di tengah ketidakpastian kondisi global tersebut, Presidensi G20 Indonesia memimpin dan mengarahkan fokus diskusi di G20 dengan mengusung tema Recover Together, Recover Stronger. Selama keketuaan G20 2022, Indonesia telah sukses menyelenggarakan acara-acara dalam mendukung pencapaian G20. Sejak Desember 2021, jalur keuangan atau Finance Track G20 Indonesia 2022 telah menjadi tuan rumah bagi 4 pertemuan Menteri Keuangan dan Gubernur Bank Sentral atau FMCBG, 4 pertemuan Deputi Menteri Keuangan dan Bank Sentral atau FCBD, dan 25 pertemuan tingkat kelompok kerja atau working group. Pertemuan FMCBG pertama membahas 6 agenda, yaitu ekonomi dan kesehatan global, arsitektur keuangan internasional, isu pada sektor keuangan, keuangan berkelanjutan, infrastruktur, perpajakan internasional. Pertemuan FMCBG kedua membahas 4 agenda, ekonomi dan risiko global, masalah penanganan dan pendanaan kesehatan global, arsitektur keuangan internasional, dan keuangan berkelanjutan. Melanjutkan pembahasan pada pertemuan sebelumnya, pertemuan FMCBG ketiga kembali membahas 6 agenda, mulai dari ekonomi global, agenda kesehatan global, isu pada sektor keuangan, keuangan berkelanjutan, infrastruktur hingga perpajakan internasional. Sejak penyelenggaraan pertama FMCBG, berbagai pertemuan kelompok kerja juga mengiringi jalannya agenda pada jalur keuangan demi mewujudkan dunia yang pulih bersama. Pertemuan terakhir, kelompok kerja jalur keuangan berlangsung pada September dan Oktober 2022. Kelompok kerja yang terdiri dari para ahli dari negara-negara G20 ini menangani isu-isu spesifik terkait dengan agenda G20 yang lebih luas, yang kemudian dibahas dalam pertemuan FMCBG dan hingga Leaders Summit. Hingga akhirnya, pertemuan keempat tingkat Menteri Keuangan dan Gubernur Bank Sentral negara G20 pada 12 hingga 13 Oktober 2022 di Washington DC, Amerika Serikat menutup helatan pada jalur keuangan Presidensi G20 Indonesia 2022. Melalui pertemuan ini, para Menteri Keuangan dan Gubernur Bank Sentral G20 menegaskan kembali komitmen mereka untuk memecahkan tantangan ekonomi global yang semakin meningkat dan berfokus pada hasil nyata untuk recover together, recover stronger. FMCBG keempat kembali membahas 6 agenda, ekonomi global, arsitektur keuangan internasional, regulasi pada sektor keuangan, infrastruktur investasi, keuangan berkelanjutan, dan perpajakan internasional. Salah satu hasil paling nyata dari pertemuan para Menteri Keuangan dan Gubernur Bank Sentral G20 adalah meningkatnya kesadaran akan pentingnya kerjasama dan keluar dari krisis bersama-sama. Lebih lanjut, hasil dari FMCBG keempat akan diusulkan sebagai substansi Leaders Declaration dalam Leaders Summit pada 15 November mendatang. Akhirnya, Presidensi G20 Indonesia juga berkomitmen untuk memperkuat sistem multilateralisme dan kemitraan global yang efektif, memastikan bahwa ekonomi dunia tetap terbuka, adil, dan saling menguntungkan, dan memastikan tidak ada yang tertinggal, baik itu negara maupun kelompok rentan, agar pertumbuhan yang kuat, berkelanjutan, dan inklusif di masa depan dapat kita wujudkan bersama-sama. Recover together, recover stronger.
Good morning, ladies and gentlemen. Well, I would like to welcome you to Global Partnership for Financial Inclusion Symposium on Digital Public Infrastructure for Advancing Financial Inclusion and Productivity Gains Towards Attaining Sustainable Development Goals. Welcome, Deputy Governor of Bank Indonesia, Ms. Filianingsih Hendarta, and Deputy Governor for Institutional Relations, Citizenship and Conduct Supervision, Central Bank of Brazil, Mr. Mauricio Maura. Assalamualaikum warahmatullahi wabarakatuh. Om Swastiastu, salam sejahtera, shalom, namo buddhaya, salam kebajikan. Distinguished guest, Deputy Governor of Bank Indonesia, Ms. Filianingsih Hendarta, Deputy Governor for Institutional Relations, Citizenship and Conduct Supervision, Central Bank of Brazil, Mr. Mauricio Moura, Head of MSME's Development and Consumer Protection Department of Bank Indonesia, Ms. Yunita Resmisari, GPFI Lead from Ministry of Finance India, Mr. Chanchal Sarkar, Chief General Manager in Charge, Financial Inclusion and Development Department, Reserve Bank of India, Ms. Sonali Sen Gupta, GPFI co-chairs from Bank of Italy, Ms. Magda Bianco, distinguished speakers from G20 delegates, international organization and private sector. And on behalf of the committee, please allow us to extend our profound gratitude to everyone for your participation and attendance in person and virtually today. Welcome to GPFI Symposium on Digital Public Infrastructure for Advancing Financial Inclusion and Productivity Gains toward Attaining Sustainable Development Goals. My name is Dinantiar Anditra, and it's my honor to welcome all of you to official side event of the G20 Global Partnership for Financial Inclusion, or GPFI 2023. This symposium will be followed by plenary meeting on 25 and 26 of June 2023. Ladies and gentlemen, in the evolving digital financial services landscape, digital public infrastructure has the potential to help countries advance their financial and economic inclusion. Under India G20 Presidency, the development of an open, inclusive, and responsible digital financial ecosystem based on a sound and effective digital public infrastructure is highlighted as a topic and a main deliverable anticipated in 2023. On the sidelines of the third GPFI meeting, we are glad to provide a platform for sharing and discuss about insight of the concept, role, policies and significance of DPI to promote financial inclusion. Furthermore, this international symposium is also expected to provide takeaways for the preparation of our recommendations that are developed by G20 GPFI. Ladies and gentlemen, this symposium will be commenced with the remark from India G20 Presidency representative, and we are honored to invite Ms. Sonali Sen Gupta, Chief General Manager in Charge, Financial Inclusion and Development Department, Reserve Bank of India, to deliver her remarks. Please welcome Ms. Gupta.
Ms. Filianingsih Hendarta, Deputy Governor of Bank Indonesia, Mr. Mauricio Moura, Deputy Governor of Central Bank of Brazil, Ms. Magda Bianco, GPFI Co-Chair, Mr. Chanchal Sarkar, GPFI Co-Chair, GPFI members, colleagues, and esteemed guests gathered here, very good morning and a warm namaskar to everyone. Bali is renowned for its highly developed arts, including traditional and modern dance, sculpture, painting, leather, metalworking, music, and its picturesque landscape. India and Indonesia, and in particular Bali, share similarities culturally as well as socially. We could not be happier that the third GPFI plenary under Indian presidency is taking place in Bali, Indonesia. In this connection, on behalf of the G20 Indian Presidency, let me begin by thanking Indonesia for hosting the third plenary of GPFI and the side event on digital public infrastructure. We also appreciate the very warm hospitality provided by the Indonesian team. Terima kasih. And advancing financial inclusion has the potential of expanding opportunities for the underserved and unserved to be the part of the formal sector and thereby partake in the growth story. Recognizing the same, the GPFI has been pursuing the goal of universal financial inclusion and taking forward the shared vision of our leaders towards a better and more equitable future. This is also reflected in the Indian Presidency's G20 theme of One Earth, One Family, and One Future. One of the priority areas for the GPFI is digital financial inclusion, and the whole world witnessed the role digitalization played in the timely and effective delivery of financial services, particularly through leveraging digital public infrastructure during the pandemic. While the pandemic is behind us, the pace of accelerated adoption of digital payments across the globe has sustained. Recognizing the criticality of digital public infrastructure in leapfrogging the financial inclusion progress, during Indian Presidency, advancing financial inclusion through DPI has been considered as the Presidency priority. Learnings and experiences from use cases in India and across the globe would benefit us immensely. Accordingly, in the last two plenary meetings, we had side events elucidating the need for having in place the DPIs, the use cases of DPIs across the globe, and digital payments, and the role of digital innovations in payment systems for financial inclusion, resilience, productivity gains, and inclusive growth. Further, we also had an exhibition on the sidelines of the first plenary meeting, showcasing financial products and services from both the public and private sector entities, which has helped in strengthening the DFI ecosystem through DPI, with tailor-made solutions for the various segments, namely MSMEs, farmers, women, and vulnerable segments. Now, moving on with today's agenda, we have a series of presentations lined up, followed by a panel discussions on TPIs for advancing financial inclusion and productivity gains towards attaining sustainable development goals. As you are aware, 7 of the United Nations Sustainable Development Goals of 2030 view financial inclusion as a key enabler for achieving sustainable development worldwide. With SDGs merely 7 years away, it becomes imperative that our interventions are driven in a manner to achieving the SDG goals. As per World Bank data, the cost of sending remittances digitally is significantly lower than the non-digital means. This reinforces that the focus of the GPFI is rightfully aligned towards digital financial inclusion in general and digital public infrastructure in particular. The panel discussion will provide the platform for experience sharing by representatives from Indonesia, Brazil, Saudi Arabia, and Turkey, respectively, and how various digital initiatives are leading towards the attainment of SDG goals. I believe the presentations and panel discussions will be highly engaging and useful for all the participants. I look forward to an enriching and fruitful session today. Terima kasih.
Thank you, Ms. Gupta. Our distinguished guests, ladies and gentlemen, this symposium is hosted in collaboration between India G20 Presidency and Bank Indonesia. Thus, we kindly invite Ms. Vilyaningsih Hendarta, Deputy Governor of Bank Indonesia, to give the opening remarks. Please welcome Ms. Vilyaningsih Hendarta.
distinguished panelists, Mr. Mauricio Costa de Moura, Deputy Governor, Banco Central de Brazil, Mrs. Magda Bianco, Co-Chair, the Global Partnership of Financial Inclusion, Mrs. Chanchal Shakar, GPFI Lead, Ministry of Finance, India, Mrs. Sonali Zengupta, Chief General Manager in charge, Reserve Bank of India, and speaker and member of GPFI, and also Bapak Samuel Pangarapan, Deputy Director General from the Ministry of Communication and Informatics, Bapak Odo Manuhutu, Deputy Minister from the Coordinating Ministry for Maritime and Investment Affairs, and also Ibu Leni Rosalin, Deputy Ministry of Women Empowerment and Child Protection. And ladies, distinguished guests, ladies and gentlemen, Om Swastiastu, Assalamualaikum warahmatullahi wabarakatuh. A very good morning to all of us. And first of all, let us extend our praise and gratitude to God Almighty that since only with His blessing, we all can congregate here on the beautiful island of Bali. It offers me a great pleasure to open and welcome you all to attend the Global Partnership for Financial Inclusion GPFI Symposium. On this occasion, I would like to thank our distinguished panelists who attended this event in person, contributing their valuable time and experience to this important event. It is a great honor to me and also to Bank Indonesia to welcome you to GPFI Symposium. I hope that this event will serve as a means of communication between co-chair, presidency, and also all GPFI members. With the interest in development of financial inclusion, particularly within the ecosystem where rapidly evolving digital and information technology over numerous opportunities in supporting the ultimate goal of financial inclusion. And ladies and gentlemen, for the last decade, developing countries have shown a big improvement in financial inclusion. The latest data from the Global Financial Index shows that account ownership in developing and high-income countries shown significant progress. How about in Indonesia? In Indonesia, financial inclusion is also improving, and we still have a very big room to expand, although further development is also required. The account ownership rate has increased steadily since 2011 and reached 65.4% in 2021. This is an increase of 16.5 percentage points in 2017. But this is still fall short of the target of 68% for 2021. In addition, financial literacy increased by 19.98%, reaching nearly 50% by 2022. However, the disparity between the account ownership and literacy remains significant at 15.7%. In the financial sector, digital public infrastructure, DPI, present a new opportunity to advance the financial inclusion. Digital financial services models such as digital money, a platform ecosystem have significantly contributed to the increase in financial inclusion in developing countries. And DPFI can remove barriers to financial inclusion and drive further innovation in the DFS space that cater to the need of the underserved population. And in doing so, we see the digital public infrastructure can enable the individual and also businesses to harness economic efficiencies that lead to the increased productivity. Distinguished guests, ladies and gentlemen, digital economic and finance are believed to be key of the sustainable and inclusive national economic growth. The acceleration of the inclusive digital economic and finance will generate opportunity here and economic participation that are equally accessible. When properly managed, we believe that the digital innovation can become a new source of prosperity. The potential for Indonesia to benefit from the digitalization is tremendous. Almost 70% of Indonesian population fall between the ages of 15 and 64. This is made possible by digitalization supporting infrastructure such as electricity, high-speed internet, and also smartphone. That is becoming more evenly distributed, accessible, affordable. Indonesia has the 4th highest number of internet users worldwide. And in the past of 5 years, especially during the pandemic, the preference of digitalization has strengthened. The number of the new digital customers increased by 21 million, and the population internet penetration rose to 74%, and 98% of the merchants in Indonesia have adopted digital payment method, and even 59% of them use the digital financing. In 2022, the gross merchandise value of Indonesia digital economy will increase by 22%. In Indonesia, the fintech and the e-commerce flourish and providing innovative consumer-focused solution. Ladies and gentlemen, the digital innovation can increase public participation in financial sector, both unbanked and underbanked. Low digital financial inclusion, limited use of digital payment, and lack of digital literacy can inhibit the development of digital economy and prevent individuals from reaping its benefit. In the context of digitalization, the payment system is a crucial entry point for the underbanked and unbanked individual to gain the access to the financial services. Digital payment system over those with limited or no access to traditional banking services, a simple, faster, and more affordable alternative for conducting the financial transaction. By utilizing digital payment systems such as the digital wallet or online payment platform, the underbanked and unbanked population can more efficiently pay bill, buy product and services, and also receive or do the transfer of money. Bank Indonesia, with the Blueprint Payment System 2024 of 2025, aim to bring the 91.3 million unbanked people and also 92.9 million MSMEs into the formal economic and finance in a sustainable manner through digitalization. So we're not aiming just open the bank account, but we aiming how to utilize the bank account and also the digital transaction for them to get the sustainable financing. We expect those financially excluded group will have a sustainable access to financial system and reap the optimal benefit of financial and economic inclusion. Ladies and gentlemen, the payment system progress over the past 5 years provide concrete evidence of its central role in implementing of the DPI. This accomplishment cannot be separated from the implementation of the Indonesian Payment System Blueprint 2025, which has produced several milestones, including first, the regulatory reform. Bank Indonesia has issued several Bank Indonesia regulation and various operation regulation together with the Payment System Association and also industry and also related ministry to strengthen Indonesia overall payment system ecosystem. And second, to encourage sound business practices through the collaboration with related parties. And second, payment system infrastructure. Bank Indonesia has launched the Fast Payment, BI Fast, in 2021 as the instant, secure, efficient, and non-stop 24/7 retail payment system infrastructure. BE-FAST transaction continue to increase both in volume and nominal term, and even exceed the share of the online transfer in nominal term. Since the beginning of the implementation until May 2023, we see the total BI-FAST transaction have reached more than 1.5 billion transaction, worth in rupiah is around 4 trillion rupiah. On the other hand, the number of banks that have joined the fast payment infrastructure membership also increased, grow to 123 members. This is representing 94% of the national retail payment system share. And the third one is standardized of the national payment system. Bank Indonesia established the national quick response code, QR code payment standard, we call it CRIS, on 2020, and the use of CRIS channel continue to expand and is accepted by all group. And if we see the data until May 2023, the CRIS merchant have reached 25.6 million merchant, and the total user reached 33.7 million. NBI will continue to encourage increase the CRIS acceptance. This year we have the target of the 45 million user and 1 billion transaction by end of 2023. And the CRIS initiative also strengthened through the cross-border QR implementation in the Asian. The 5 member, Indonesia, Malaysia, Singapore, Thailand, and Philippines, we have a regional payment connectivity. And one of the program is how to connect the cross-border QR implementation. Right now, we have already connected with Thailand and Malaysia. Hopefully, by end of this year, we will have a connection with Singapore. And we also have already write the MOU with RBI and also BOK, and also with MITI Japan. So hopefully in the future we will have a connection also with Japan, India, and also with Korea, and of course with another country. Distinguished guests, ladies and gentlemen, I would like to highlight the remarkable progress that Indonesia has achieved in terms of DPI practices, particularly in digital payment system. Indonesia has embraced digital payment system transformation as the implementation of DPI practices to encourage the financial inclusion and economic growth. Bank Indonesia's support for DPI implementation is focused at least on the 3 areas. First, in social assistance. Bank Indonesia is committed to continuing to encourage the development and implementation of digitalized social assistance program, prioritizing customer-centric, omni-channel interconnection and interoperability, as well as implementing end-to-end integrated data center, drive the expansion of social assistance program digitalization. Second, in the electronification of the local government transaction, digital payment are used to support the payment of taxes, levy, and also government digital services in synergy with the Regional Development Bank Transformation Program. The acceleration and the expansion of the local government transaction are directed toward realizing better financial governance and increasing regional revenue potential. Lastly, in the transportation area, Bank Indonesia will oversee the digitalization of the transportation, resulting in the omni-channel digital payment mechanism and promoting the business model replication throughout the region. 2 national flagship, namely first, Jabodetabek. This is the Jakarta with the satellite area, and also the multi-lane free-flow transportation integration continue to be developed as the foundation for accelerating the digitalization of transportation in the various regions. Distinguished panelists, guests, ladies and gentlemen, in conclusion, there are 3 essential points I would like to make regarding the digital public infrastructure. First, DPI is instrumental in fostering financial transformation and inclusive economic growth. It functions as a solid foundation for digital innovation, facilitating individual and businesses access to financial services and accelerating productivity across multiple industries. Second, harnessing the full potential of DPI, we can expedite financial inclusion, facilitate easier and faster access to financial services, and strengthen sustainable economic growth. And the third, we must uphold consumer protection in the development and utilization of DPI. It is essential to ensure the data security and privacy, implement appropriate regulation, and enforce strict oversight to safeguard the interests of the consumer in digital transaction. We can establish a secure, inclusive, innovative digital economic and financial ecosystem by the strong engagement and cooperation among the government, financial institution, industry participant, and consumer. So let us work together to fulfill the vision of the expanded financial inclusion, increased economic productivity, and strong consumer protection in digital era. Overall, we indeed appreciate the inclusion of digital public infrastructure as one of the main topic of discussion and deliverable of the GPFI under the India presidency. And this is in line and advancing the discussion of the financial inclusion framework in harnessing digitalization to increase productivity, sustainable and inclusive economic that has been produced during Indonesia presidency last year. We believe that the continued discussion in digitalization and particularly digital public infrastructure under GPFI will give significant contribution to global discourse on this issue. As we gather here today, I encourage all of us to use this symposium as a forum to evaluate best practices and insight gained from country DPI implementation experiences. So let's take advantage of this opportunity to share knowledge, discuss best practices, and identify areas where we can collaborate to improve our respective DPI ecosystem further. So, as mentioned, there is a quotation, no one can whistle a symphony. So it takes an orchestra to play it. So let's play the orchestra together. Thank you. May Almighty, God Almighty bless and enlighten our step toward for the better future. Thank you. Om Santi, Santi, Santi Om.
Thank you, Ibu Fili. Please stay on the stage. And to commemorate this moment, I would like also invite to the stage for the first photo session, Mr. Mauricio Moura, Deputy Governor for Institutional Relations, Citizenship and Conduct Supervision, Central Bank of Brazil, Ms. Yunita Resmisari, Mr. Chanchal Sarkar, Ms. Sonali Sen Gupta, Ms. Magda Bianco, Mr. Haitam Al-Gulaika, Ms. Ozlem Oktay, and Mr. Siddharth Shetty. Kindly also join us virtually, Ms. Liv Nordaut and Ms. Kezom Masali. We will take 2 shots of photos on the count of 3. 1, 2, 3. Once again, give your best smile. 1, 2, 3. Okay, for the second photo session, we would like to also invite our distinguished guests to join us to the stage. Mr. Odo Manuhutu, Mr. Samuel Abrijani Pangerapan, Miss Lenny and Rosalind, Miss Elsia M.S. Chani, Miss Isafitri Hafid, and Miss Monica Tin. Once again, we will take 2 shots of photos. Okay, are you ready, ladies and gentlemen? We will take 2 shots of photos and the count of 3. 1, 2, 3. Once again, give your best smile. 1, 2, 3. Okay, thank you, ladies and gentlemen. You may return to your seat. Ladies and gentlemen, next let us move to the first speaker, which will explore more about the digital infrastructure in the perspective of international context. And already joined us virtually, Ms. Liv Nurdaud, co-lead of Digital Public Goods Alliance, or DPGA. In her role in DPGA, Ms. Nurdaud leveraged her 15 years of experience with the Norwegian Agency for Development Cooperation, or NORAD, where she has worked on country capacity building as well as leading a number of digital innovation projects involving open source technologies. Ladies and gentlemen, without further ado, Ms. Liv, the floor is yours.
Distinguished audience, Excellencies, Selamat Pagi. I'm speaking to you from Oslo, Norway, where it is very early morning, and I regret that I was not able to join you in person for this event. It's an immense honor to address the 3rd Global Partnership for Financial Inclusion meeting. Let me start by giving a very quick introduction to the Digital Public Goods Alliance, the DPGA, before I move swiftly into how you can leverage digital public goods for advancing financial inclusion. The DPGA is a multi-stakeholder initiative that was founded in 2019 as a direct follow-up to a recommendation from the UN Secretary General's high-level panel on digital cooperation. The Alliance facilitates the discovery, development, use of, and investment in digital public goods in order to accelerate attainment of the Sustainable Development Goals. Today, we are a rapidly growing multi-stakeholder alliance of around 30 members, spanning membership from countries, UN agencies, philanthropic and government funders, think tanks, and technology companies. So, what is this all about? Digital public goods, or DPGs, are open source digital technologies of relevance to the Sustainable Development Goals that have also been designed to minimize the risk of doing harm. The definition of DPGs was laid out by the UN Secretary General in his roadmap for digital cooperation in 2020. And at the DPGA Secretariat, we have operationalized this definition into a 9-indicator standard for digital public goods, which we are stewarding and evolving as an open standard. So why do digital public goods matter for advancing financial inclusion? Let me get to this first by talking about digital public infrastructure, DPI. DPI refers to society-wide digital capabilities that are essential to participation in society and markets, The most well-known and proven DPI components we have to date are verifiable digital identity and civil registries, real-time payments, and secure data exchange, but there are more coming. DPI is built on top of the original digital infrastructure, the mobile networks and the internet, which came from Europe and the US. But digital public infrastructure that we're talking about today is different from the mobile networks and the internet in that it has fewer hard infrastructure requirements. Hence, it scales more easily. And this segues nicely into why digital public goods matter. If we look at India, as we all know, India has been a global trailblazer on building inclusive digital public infrastructure since it started its journey with the digital identity system Aadhaar in 2008. When India embarked on this journey, it had the advantage of a highly skilled tech community that was able to both build bespoke technologies and to leverage existing open source solutions to complement them. This allowed India both to save time and money and to protect its sovereignty. Today, we have an evolving landscape of more curated and built-for-purpose open source solutions in the form of digital public goods. Countries can freely adopt these solutions and adapt them to meet their own context-specific needs, including integrating them with their existing solutions. And countries are indeed turning to digital public goods. Over the last years, as country demand for building inclusive digital public infrastructure, particularly for financial inclusion, has risen sharply due to the COVID experience and the subsequent food crisis. And we have seen that more and more countries are looking to open source alternatives when building out these digital foundations. Countries want to avoid long-term lock-in to vendors as a means of protecting their digital sovereignty and strategic capabilities. They want to build up local vendor ecosystems and value creation and innovation capacity. They want not only to take part in their own digital transformation journeys, they want to be in the driver's seat. Exciting initiatives have emerged over the last years to meet this demand for open solutions that can be deployed for digital public infrastructure and for financial inclusion. This includes MOSIP, the Modular Open Source Identity Platform, a digital public good which was developed by many of the same people that helped build Aadhaar in India, and which is stewarded at the International Institute of Information Technology in Bangalore. 11 countries are currently implementing MOSIP, and many more are considering it. And as I'm sure you all can appreciate, having a verifiable digital identity and a way of doing faster, more reliable, and cheaper know your customer processes is a critical step in advancing financial inclusion. A highly inspiring example in the payment space is the linking of multiple digital public goods into one interoperable framework called G2P Connect. And this work is stewarded at the Center for Digital Public Infrastructure in Bangalore. A last example to also cover data exchange is the secure data exchange platform X-Road, which is a key part of Estonia's, Finland's, and Iceland's own digital public infrastructure and governed jointly by them. X-Road is digital public infrastructure for these countries, but it is also made available open source as a digital public good. It is therefore in widespread use globally, with 137 countries represented in the X-Road community and 253 million end users worldwide. You will be able to find all of these digital public goods that I just mentioned and many more in the DPGA registry for digital public goods. We currently have more than 150 verified DPGs in the registry. All of them are not relevant for building digital public infrastructure capabilities in countries, but we are working to make those DPGs that are most relevant easier to discover for countries. And lastly, before I hand over to Kesom, a close colleague and fellow DPGA member, coinciding with the trend for more countries to adopt and adapt digital public goods, I see a unique willingness of countries to help shorten each other's learning and adoption journeys on the path to financial inclusion and to building digital public infrastructure. And I would like you, dear audience, to help harness and strengthen this momentum. I hope we can grow a movement to scale safe and inclusive digital public infrastructure centered around sharing of learnings and best practices between like-minded countries across income levels and geographies, sharing and adoption of digital public goods that are sustainably funded and governed and that countries can deploy to build out their digital public infrastructure capabilities, and efforts to strengthen regional and local value creation and innovation in the process of building digital public infrastructure. Thank you. Terima kasih.
Thank you, Ms. Liv Nurdaud. Ladies and gentlemen, next I would like to invite Ms. Kezom Masali, Head of Digital Programming, UNDP Chief Digital Office, who also has joined with us virtually. Ms. Masali leads UNDP's work on inclusive digital public infrastructure, serving as a governing member of the Digital Public Goods Alliance, and she is also a co-founder of Open G2P, a DPG focused on digitizing government and humanitarian cash transfers. Without further ado, Ms. Masali, the floor is yours.
Esteemed dignitaries, Deputy Governor, Indonesia, Brazil, GPFI co-chairs, and distinguished guests, as well as my good friend Liv. It's a pleasure to be here at the Global Partnership for Financial Inclusion meeting, and many greetings from New York UN headquarters. I do wish I was there with everyone in person, enjoying the great hospitality and culture, as well as the important discussions on advancing financial inclusion, particularly for women MSMEs in beautiful Bali. I do have a few slides, so I will request our host to kindly project them on the screen. As we have heard from the previous speakers, we are at an extraordinary moment here today. And on behalf of the United Nations Development Programme, and as a partner of the India G20 Presidency in the Digital Economy Working Group, thank you for having me here to share our perspectives from the wider DPI ecosystem. In the next slide, as we can see from the developments on digital public infrastructure, we are at the helm of some very exciting announcements and global direction that the India G20 presidency is achieving at a little over the midpoint of its presidency. And last year, when UNDP co-chaired the Digital Public Infrastructure Digital Cooperation event at the 76th UN General Assembly, along with the Digital Public Goods Alliance, World Bank, heads of states, ministers in the private sector, I could not imagine that we would be at a moment where this week we had Prime Minister Modi and Prime Minister Biden, two G20 countries, announce cooperation on digital public infrastructure to advance digital development and the Sustainable Development Goals. We also saw some similar announcements between the EU and India, between the Shanghai Economic Cooperation Group, among Quad leaders of India, Australia, Japan, and so on. So it really is a tremendous moment. And to quote India's foreign minister, the G20 collective is recognizing that the India presidency is not only speaking for itself, but for the world, especially the 130 plus countries who are marginal to the big debates going on in the world. And therefore, as the UN, we are very privileged and pleased to partner with India, with Indonesia, and many countries. And indeed, the UN Secretary General has also acknowledged the importance of safe and inclusive digital public infrastructure as a force multiplier in his recently released policy brief on the Global Digital Compact. In the next slide, as UNDP, we have been accompanying India and our 171 other member states, from Germany to Colombia, from Estonia, France to Kenya and Bangladesh. Digital public infrastructure is a global movement, and especially becomes even more poignant as a global movement when technology from one country is shareable as digital public goods in another country. And therefore, DPI is global innovation at its best. And while different countries will follow different approaches, there are foundational categories of verifiable registries, payment networks, consent, and so on that make up the 21st century's digital public infrastructure. And this is what really unites this DPI opportunity across the world and across many sectors. And for us at UNDP, the global normative frameworks for safeguards and inclusion are critical as much as the technology and the country level technical assistance. And as a development agency, we are embedding DPI thinking and approach across our 130 program countries, trying to solve for access to health, justice, climate change, carbon trading, data exchanges, and so on. In the next slide, you will see that we are also learning, and I'm happy to share these with you for further discussion. We are learning that there are barriers preventing rapid uptake of safe and inclusive digital public infrastructure towards inclusion, and this will require us to work collectively on both the structural challenges to international cooperation on DPI, as well as, of course, looking at how to meet the tremendous demand at the country level. For example, inadequate DPI governance frameworks and safeguards to support privacy-first approaches at the country level will have to be strengthened hand in hand with the global challenge of lack of full understanding about DPI's implication in open data standards, cross-border data flows, and sovereignty. And for that matter, creating a conversion space for member states and stakeholders to continue to steward this very important and foundational innovation towards leaving no one behind. In the next slide, as UNDP, we did a rapid potential impact of digital public infrastructure in 70 countries across climate, finance, access to justice, rule of law. And in the next slide, you will see that what we found was extraordinary. If we move to the next slide, with DPIs, countries can add up to 1.4% to their GDP. That's about $280 billion. 16 to 19 million more MSMEs can access credit. 570 million more people can access digital payments to make daily payments, access cash transfers, and so on. And this is really a tremendous opportunity, and therefore it's so amazing that digital public infrastructure is being discussed front and center as part of GPFI. If we move to the next slide, we also note that this tremendous opportunity is huge and will need to continue to strengthen global leadership and multi-stakeholder approach to unlock targeted country support and increase financing and technical assistance so that we may have more inclusive, gender intentional, and rights-based digital public infrastructure. Because DPI, like any technologies, can be a force of good or lead to surveillance state. And for us at the UN, taking a rights-based approach with the non-tech layers of DPI should go hand in hand with technology and is critical. With this, I move on to the next slide, where as part of being a knowledge partner to the G20 Digital Economy Working Group, I'm also pleased to share some updates on the discussions there on digital public infrastructure. And of course, there is tremendous global leadership. There's lots of issues that are on the table for discussion and consensus. In the Digital Economy Working Group, there's increasing consensus that DPI is an approach that can transform countries to accelerate the SDGs at scale. And as you can see, the three priorities are to develop a common framework for DPI, to mobilize more financing for upstream readiness for both technology, solving for procurement strategies, as well as governance capabilities, and then working to create common repositories, building on the important work of the Digital Public Goods Alliance, and so on. In the next slide, I want to note here that there's broad alignment on what are the common characteristics of DPI, upon which multiple and country context-specific DPIs can flourish. As you can see, the delegates are referring to digital public infrastructure as a set of shared systems which are interoperable, built on open standards and specifications to provide access to public and private services at societal scale. And DPIs can drive exponential outcomes within and across various sectors by creating ecosystems that combine the right technology architecture, the governance frameworks that create accountability, transparency, and is participatory, and the ecosystem. I cannot stress how important the ecosystem and the private sector innovations on digital public infrastructure becomes, whereby additional services for people solving their daily needs becomes possible at population scale. With this, the last slide is around the 8 broad principles that are being suggested for digital public infrastructure in the Digital Economy Working Group. And they range from interoperability to privacy to grievance redressal mechanism. And these become important fundamentals to consider, including for financial inclusion, so that we may safeguard people, agree on oversight arrangements, and so on. And I believe these are important discussions already happening at GPFI among countries, among partners, and so on. With this, I just want to say thank you so much and to coach the UNDP administrator, Akim Steiner. The future of development is digital. And as Pramod Verma, who is the world's leading builder of DPI, says, digitization in countries is inevitable, but an inclusive, innovative, and competitive one isn't. So I really thank this esteemed group of practitioners, of governments, of private sectors for prioritizing DPI for financial inclusion and productivity. And I want to wish you all the best in your deliberations as you develop recommendations for GPFI to take forward as a united front. Thank you so much for having me here.
Thank you, Ms. Kizom Masali, for your presentation. Ladies and gentlemen, next we will listen to the presentation from the co-founder of Sahamati, Mr. Siddharth Shetty. Mr. Shetty has been a participant in numerous government and regulatory committees in India and has been advising advanced and emerging economies on their deployment of digital public infrastructure. Please welcome to the stage Mr. Siddharth Shetty.
Thank you. It's truly an honor to be here and present to you on digital public infrastructure. I would first like to extend my gratitude to Indonesia for hosting us here in Bali. It's absolutely beautiful, and I would also like to thank India for inviting me and giving me a chance to speak on India's DPI journey. I'd request if maybe the slides can be pulled up. That's perfect. So the idea behind today's conversation is really, in past sessions, you have heard a lot about what is digital public infrastructure, what are the flows and technology systems that make up digital public infrastructure. And we heard some of that from the previous set of speakers as well. What I thought we could focus on today is cover India's journey, particularly from an institutional and regulatory lens of how we went about building out DPIs for financial inclusion. Next slide, please. To start off with, just so that we are on a common page, really the heart of DPI is achieving societal inclusion, financial inclusion, health inclusion, broader socioeconomic inclusion. And really, to achieve that, that requires the balancing between objectives at an individual or MSME level and nation-state/government sovereign objectives. From an individual standpoint, what that means is an individual should have the ability to access financial services at any touch point, whether digitally or physically. They should have the ability to do that in an affordable manner. It shouldn't be expensive or extremely prohibitive, which blocks them from accessing these types of services. When they access a whole range of financial services, whether it's for driving further growth, protecting them from various risks that may happen, they should have choice and agency as part of that. And that can only be possible if there's a diversity and multitude of options, of companies, of market players that are able to serve them in a safe, secure, privacy-preserving manner. And we want all of these objectives to be met, while at the same time, from a sovereign's perspective, we're really ensuring this is a competitive playing field, open to public and private sector actors. It's a playing field where there's strong governance in place, and governance at an institutional level, governance at a technology level. And really, this ecosystem as a whole is driving broader economic growth. If we go to the next slide, when we think about these objectives in the context of DPI, one way to look at it is in these three layers. At the base is often digital identity of different shapes and forms, but that really enables an individual or enables an MSME to take the first step in participating within the formal economy. Once they have the ability to establish proof of personhood, establish who they are as an individual or SME, the next step that comes up is how do they engage with other participants in the formal economy. And that other participants could be other businesses, other individuals, or other state and central government agencies. And in that lens, often payment systems play a very crucial role. And so digital payments, and thinking about DPI and the construct of digital payments, whether it's moving money between two individuals in a P2P manner, whether it's moving money from an individual to a merchant, whether it's businesses moving money to each other, or as we've seen in the pandemic, governments transferring benefits to individuals. All of that becomes quite critical once people have taken the first step to at least be a part of the formal economy. If the transaction costs in doing that are too high, then most people or SMEs end up dropping off. And as they transact, as they engage with other actors, they're obviously generating large amounts of digital transactional trails. And so therefore that begs the next question, which is how are they empowered with these transactional trails? How are they empowered with their own data, which might be not just transaction data, but different types of credentials, skilling credentials, other attestations and certificates that they may have received during the course of their operation? How are they empowered to then meaningfully use that with other service providers within the ecosystem? So if you go to the next slide, you've heard how India has applied this on both ends of really the spectrum. On one end, this has brought in huge efficiency gains, where we are seeing hundreds of billions of dollars transferred to beneficiaries straight into their accounts in complete real time. We are seeing how that has eliminated a lot of the leakages that would traditionally happen within the system because of direct benefits transfer rails that were created to the tune of about $25+ billion. But it's not just efficiency on the expenditure and making those government processes easier. It's also how do we increase economic growth as a whole. And because of digital public infrastructure that's been created in the space of identity, payments, data sharing, and broader ecosystems, what we are seeing is that is driving broader revenue upsides for the country economically. And so whether that's in the form of new fintechs and private innovators that are being created, whether that's in the form of these MSMEs getting access to credit, and if we look at it within our GST system, we have about 13 million SMEs. If they are able to access credit and hire one more individual, that's about 13 million jobs that get created. So whether it's the fintechs, whether it's the SMEs, whether it's the individuals using this infrastructure to then get access to better opportunities, that's really driving greater revenue creation within the country as a whole. And if we go to the next slide, really that wouldn't be possible if we didn't have a very strong governance framework in place. So when we think about DPIs, it's really technical standards, open technical standards across identity, payments, data. On top of these technical standards, different market players, public or private sector, may use it to implement end experiences that you and I use to interact with the system. But what's really at the heart of it is the overarching governance frameworks, which is the regulations, the rules, the norms that get created, and the institutions that drive enforcements of these norms. And so in today's conversation, I've taken 3 examples across India's journey in digital identity, and then related to that actually digital taxation, our journey with digital payments, and then our journey with digital data sharing, and sort of bringing out a picture of what the institutional mechanisms have been behind these infrastructure projects. Next slide, please. So if you go back to about 2008, 2009, India was sort of at the cusp of working on highly critical digital infrastructure projects, where these were a set of reforms in the taxation space, reforms in the digital payment space, reforms in digital identity. And we were seeing, like most technology projects, a broad set of issues when you think about carrying out or execution of these reforms. One, typically these large societal projects span multiple levels of government, between central and India being a federal structure, so we have 28 states and 8 union territories, and how do these interact with each other? There are often huge silos, not just at a center state level, but also silos that happen when these infrastructure projects, which are cross-sectoral, cut across multiple government departments. At the same time, since the success of DPI often is dependent on private innovation that's building on top of it, there are issues that come around when you have, when one thinks about how does a government agency or a government department interact with private sector on the other end. What are the institutional means with which they can interact, engage, drive advocacy to build out that private sector ecosystem? And also many of these projects have a sovereign function, so you're often trying to balance these trade-offs when we think about it in the context of, let's say, payments, which clearly has a sovereign function. What does private sector do? What does the government do? What is the right balance? And so we were sort of dealing with all of these questions, and around that time, a committee was formed to look at institutionally what could be the solve of it. And if you go to the next slide, that really drove the genesis of thinking around what are called national information utilities. This has evolved over a period of time, but if we go to the next slide, the first national information utility that we had created was in the case of Aadhaar. So if we step back and look at if you had to implement digital identity, the traditional mechanism to do that would have been a government agency contracting it out to a set of vendors. And when we're thinking about, a really societal scale digital ID, with the vendor-government relationship, there are often a set of issues that arise which we're all familiar with. And so to avoid those issues and yet meet the inclusion objectives that that I presented earlier is where you see the creation of NIUs coming in. So NIUs, you could think of them as these intermediary special purpose vehicles that got created. They on one end work with government agencies. The government agencies continue to hold regulatory oversight over those domains. But on the other end, the NIUs had the ability to work with a broad vendor ecosystem. And the reason they had that ability, because these often were able to hire private talent, either as professionals into the system or in some cases as volunteers. They were run through an independent management structure, again from private sector. And while strategic ownership continued to be retained within the government on some of these mission-critical programs, the rest of the operational implementation was really driven, or the ecosystem creation was driven through the NIUs. So if you go to the next slide, as I mentioned, the first NIU to drive the rollout of India's digital identity program was the Unique ID Authority of India. So Aadhaar is essentially a 12-digit unique identifier that's been issued to 1.34 billion Indians. And it needed a large ecosystem, both on the supply side, think of it as enrollment agencies, deduplication vendors, hardware vendors, a whole ecosystem to be created to enroll 1.34 billion people. And then on the other end, you needed a demand-side ecosystem to be created because banks had to use it to do KYC to open bank accounts, and that's why India was able to leapfrog. We shaved off about 40 years through the usage of Aadhaar in opening of bank accounts, which would have traditionally taken otherwise about 5 decades. Or similar demand-side initiatives in the telecom sector and other fintechs that also decided to use these identity systems. And so UIDI essentially played an instrumental role as a statutory authority in orchestrating both the supply and demand side while this worked within the aegis of the Aadhaar Act. So when you think about it, you have the Aadhaar technology standards. These are open technology standards to drive authentication and essentially any individual being able to prove their personhood within the ecosystem. But that was backed up through an institutional vehicle such as UIDAI, which in this case was a statutory authority, but when we come to payments and then data sharing, actually you'll see it opening up more to market participants, while of course there's regulatory control within their domain regulators. If you go to the next slide, the second area we saw this being applied shortly after was in the space of digital taxation. So India underwent a similar set of reforms around harmonizing multiple tax codes, again, across a federal structure, and largely 2 DPIs that got created, GSTN, which is the Goods and Services Tax Network, which today has about 13 million SMEs as a part of it, and FASTag, which is an electronic toll collection system that today every vehicle in India essentially, think of it as an Aadhaar for a vehicle against which they can pay toll or other sorts of programmatic payments can be attached to that vehicle. For that to be created, if we go to the next slide, we took a similar approach. So the administration of highways in India is run by the National Highway Authority of India, or NHAI for short. But if NHAI had to implement these large-scale DPIs, it would have been very difficult. They would have had the set of issues that I outlined before. And so what NHAI did is they then created IHMCL, which is the Indian Highways Management Company Limited, which basically had the features of a national information utility. So while regulatory control remained with NHAI, IHMCL was able to hire private sector talent. They had a diversified board structure, professional management, to then implement FASTag and other such DPIs. We saw the same even in the case of taxation. So we have the GST Council, which contains the finance minister along with union finance minister as well as finance minister from the various states, which determine the tax code and other regulatory structures. But if the GST network had to be operationalized to tens of millions of SMEs, it would have been, again, difficult to do that within one particular government department or within the GST Council, which is a policy-making body. And so that's where GSTN stepped in to essentially drive that end implementation. Next slide, please. So coming to the world of payments, if I briefly recap, UPI, which launched in about 2016, is a real-time payment system. It allows individuals and merchants in India to transact with each other in a completely interoperable manner. Last month, we did about 9.4 billion transactions on UPI, and since it launched in about 2016, there were about 4 million SMEs that had point-of-sale terminals, and because of this open network that got created, earlier this year, that number has now jumped up to about 50-odd million SMEs that have point-of-sale QR codes, so to speak. If you look at the back end of this ecosystem, next slide, please, you now see an evolution in the institutional thinking behind national information utilities. So you no longer needed a whole new statutory authority to be created just to run an ecosystem like UPI. But under the aegis of the existing Payment and Settlement System Act that was already laid out way back in 2007, and most countries actually have similar such acts, and also in alignment with the Prevention of Money Laundering Act, which is essentially derived from FATF regulations, we went about architecting UPI. So we built it on top of the banking system in compliance with AML and CFT norms, yet you created an open network that was available to a broad set of private innovators. And that was really possible because of leadership of the central bank that played an instrumental role in creating a non-profit body, which is called the National Payments Corporation of India, which again is a consortium of a set of banks, large, small banks across public and private sector, that drive the base interoperable infrastructure, which is the settlement system behind UPI. If you go to the next slide, you'll see that. So essentially, NPCI operates at the base, but then again, this had to be opened up to private innovators, which were a whole range of fintechs that innovated on top and built out those diversified consumer experiences. And so that partnership meant that you were in compliance with the settlement norms. You were not, unlike, let's say, stable coins or some of the crypto developments, creating a whole new parallel system which brought in other AML and CFT concerns, but you were still able to solve for real-time payments at a scale of 1.4 billion by opening it up to private innovators while ensuring that it was adequately regulated. So this created a playground for regulators to regulate and innovators to innovate. And we saw an interesting evolution as this concept was pushed even forward when it came to the space of data. If you go to the next slide. So essentially what we're seeing is a transition early on from platforms. In the case of Aadhaar, it's a digital identity platform, towards protocols. UPI being a protocol, and now when you think about data exchange moves through protocols. Protocols are essentially, every time you use the internet, the www that you see in your browser is nothing but a protocol, or the HTTP is nothing but a protocol. A large part of the internet was a base set of protocols on top of which private innovators built experiences that you and I use today. And so the key question that comes up is, in financial services, as these protocols get created, how do we then think about governance, and what are the frameworks around that? So one area we saw this coming into was really, if you go to the next slide.
Excuse me, Mr. Siddharth, your time will be running out.
Yeah, I'm almost done. So when it came to the space of data, and particularly data empowerment, what brings us here is really the account aggregators. So when we were thinking about data, the key question was, traditionally people would go to, the previous slide. You'd either go to your financial information provider, which was the custodian of your data, to access it. Imagine you going to your bank branch taking printouts, or going to your net banking portal and taking PDF statements. And then you try to collate all of that into a folder and then transfer that on the right. Let's imagine you want to give that data to a lender who will then underwrite you and give you a loan offer, which you may accept or not, depending on those terms. And that was typically a very broken experience. Now, one mechanism we could have used to go about thinking about it and solving for it is creating one large central platform where all of this data could have been brought together. And that brought in various concerns ranging from surveillance to other privacy risks that come up. And that's where India took a protocol approach towards it by saying, let data remain where it resides, so in a decentralized manner. You unbundle consent, the key concept being that an individual or SME should have the ability to give consent to share their data. And that's where the institutional innovation by RBI of account aggregators came in. And these account aggregators were regulated by RBI, and this was a cross-sectoral regulatory framework that was created, but implemented through a common protocol. And so if we go to the next slide, essentially for protocol governance, we saw a triumvirate approach emerging. So RBI, along with FSDC is our apex interregulatory body which had other sectoral regulators like our capital markets regulator, insurance regulator, pensions fund regulator. They collectively created a framework that established who are all the entities that should participate, what are the terms of consent, and how the broad construct behind the ecosystem would work. They then let the technical standards be defined by a separate technical standard organization, which in this case is Rebit. But at the same time, if you have technical standards, you have your policy framework. To unleash animal spirits of the market, you need to do a lot of market development, and that's where a market collective called Sahamati came in, which brought a diversified group of market players together to create shared norms, shared guidelines, and really drive the end implementation. And so if we go to my last slide, really what we are seeing is over 300 plus financial institutions have now come in to this ecosystem of data sharing because of a protocol approach. But that required a greater evolution in how we thought about governance, ensuring that there's accountability, ensuring individuals have agency over their data, the right safeguards are put in place, but you're leveraging private sector at scale versus all of this could have just been otherwise one traditional platform. And we've seen the issues that may come up with platforms, whether it could be rent-seeking or other types of controls some of these intermediaries may try to establish. And if you go to my last slide, really it is this building block approach. You could think of DPIs as a set of Lego blocks, and we've just touched upon three to four in today's conversation, but it extends across sectors. And a common theme you'll see is really this idea of having new information utilities created, these special purpose vehicles that either drive the end governance, or you see a more decentralized form where market collectives and technical standard organizations complement the work of regulators to drive end governance. Thank you so much.
Thank you, Mr. Siddharth. Ladies and gentlemen, before proceeding to the next panel session, we will have a short break in the foyer area, and we kindly request you to return to the ballroom area in 5 minutes. Thank you. Ladies and gentlemen, the next session will begin shortly, and we would like to invite all the participants to kindly enter the ballroom area. Thank you. Once again, the next session will begin shortly, and we would like to invite all the participants to kindly enter the ballroom area. Thank you. Ladies and gentlemen, the next session will begin shortly, and we would like to invite all the participants to kindly enter the ballroom area. Once again, the next session will begin shortly, and we would like to invite all the participants to kindly enter the ballroom area. Thank you. Ladies and gentlemen, please be seated because the next session will begin shortly. Ladies and gentlemen, welcome back to the Global Partnership for Financial Inclusion Symposium on Digital Public Infrastructure for Advancing Financial Inclusion and Productivity Gains Toward Attaining Sustainable Development Goals. Next, we will proceed to the panel session, which discuss experiences on digital public infrastructure for advancing financial inclusion and productivity gains toward attaining Sustainable Development Goals, or SDGs. And we would like to invite Mr. Chanchal Sarkar as GPFI lead from Ministry of Finance, India, that will moderate the panel discussion today. Mr. Sarkar is currently working as Economic Advisor, International Economic Relations Division of the Department of Economic Affairs, Ministry of Finance, Government of India. And as vertical head is India's G20 Finance Lead of Global Partnership for Financial Inclusion, or GPFI. And he has also recently been elected as G20 GPFI co-chairs for 3 years from 2024 until 2026. Ladies and gentlemen, without further ado, please welcome to the stage Mr. Chanchal Sarkar.
Thank you very much. Thank you, Indonesia, for hosting us so well and giving us this opportunity. And also, I wish to thank the panelists. What a powerful presentation was the inaugural, I would say, address by our distinguished Deputy Governor, Bank Indonesia, and other address. It was really set the tone of the entire discussions. Thank you very much for your presentation, and again, thank you, Indonesia, for this hosting this very important event of this experience sharing on digital public infrastructure for advancing financial inclusion and productivity gains towards attaining sustainable development goals in this third GPFI meeting. So today, when the world is more interconnected and digital technology has been integral part of our lives, and as we grappling, the entire world is grappling with various challenges to achieve the sustainable development goal and growth and inclusive growth and development and sustainable development. So we find that the financial inclusion as a group in G20, the right forum to include and have inclusive efforts to create more opportunities, create more employment, have growth, have inclusive and sustainable growth that would enable us to achieve the SDG goal by 2030. So the topic, therefore, is deeply DPI, we have heard how powerful the digital public infrastructure can be as an instrument to achieve such goal in terms of advancing financial inclusion and productivity. We know that 1.4 billion people are still unbanked, and a significant finance gap in SME finance are around globally, around $6.55 trillion as per some estimates. While the SME sector provides a huge amount of employment, so we cannot afford to remain silent on and adopt and this thing, the innovative methods to ensure finances and adopt those technology, including digital public infrastructure, that can create opportunities and provide solutions at its scale, which we need at this moment of time. So keeping in that in background, India had chosen its presidency deliverable on using the digital public infrastructure for advancing financial inclusion and productivity gains, and which will in turn achieve us the sustainable developmental goals. So that's the background, and also this is, as you all know, that this particular seminar is a gradual progress. In fact, we organized a similar program in the first, also second, and in second plenary, many countries wanted to share their opportunities and their experience on DPI and create their story. So therefore, that's how we organize this. And I am extremely fortunate to be able to moderate exceedingly experienced and an extraordinary set of panelists I have. So if I, without any delay, if I may request Mr. Mauricio Moura, Deputy Governor, Central Bank of Brazil. Mr. Moura has been serving as Deputy Governor since 2017 and is in charge of institutional relations, citizenship, and conduct supervision. After having served as Deputy Governor for administration, among the topics that fall under his purview are financial education, conduct of financial institutions regarding customers, and AML, CFT, institutional relations, and communication with citizens, government branches, members of Congress, and with the press. So may I now invite Mr. Mauricio Moura on stage, please. Thank you. Our next, may I invite Ms. Unita Rishme Sari, Executive Director, ME's Development and Consumer Protection Development, the Central Bank of Indonesia. Ms. Sari has extensive experience in SME's development and financial inclusion area during her 30 years of services in Bank Indonesia. She has led various projects on a national scale and represented Bank Indonesia in various international forums, most recently in 2022 during Indonesia G20 Presidency as lead of Indonesian Presidency, representative for GPFI and in ASEAN, as co-chair of Working Committee on Financial Inclusion, along with National Bank of Cambodia on 2020-2021. So may I take this opportunity to invite our friend, Ms. Unita Reshmi Sari. Thank you, Sari. Next, if I may invite Mr. Haitham Al-Gulhal Yega, Senior Advisor, Saudi Arabia Monetary Authority, Saudi Central Bank. Mr. Gulaiga is a financial expert with over 19 years of experience in the sector, contributing significantly to the development of the financial ecosystem in Saudi Arabia and globally. As a senior advisor to the Saudi Central Bank, he plays a key role in promoting financial sector development across the kingdom by leveraging his expertise, experience, and extensive network. So may I invite Mr. Haitham, please, on the dais. Next is Ms. Özlem Oke, GPFI Lead, Head of Division, Ministry of Treasury and Finance, Republic of Turkey, G20 GPFI Lead. Ms. Okte is the Head of Division for the G20 and IMF Department at the Ministry of Treasury and Finance. She is responsible for a variety of G20 work streams, including developmental, digital economy, and financial inclusion at Turkey G20 Sherpa and Finance Officer. So may I invite Ms. Özlem on the dais, please. Thank you very much and welcome once again on this dais. So my job is fairly simple. I would request one by one in terms of the order I have requested them and on the dais. So one or two housekeeping. So each one I would request you to come and present and I would request as per for the interest of time to restrict your intervention within time. And once we have completed, there will be a questions and answer sessions. So with this, may I now have the privilege of requesting Mr. Mauricio Mora to come up and share experience of Brazil. Thank you. Over to you.
Thank you very much, Chantal. Thank you for the moderation of this panel. Good morning for our distinguished panelists and also the audience. Thanks for Indonesia for the amazing hospitality and Bali for the beauty. Next slide, please. Next slide. Okay, thank you. Today I will present to you an innovative and transformative agenda in Brazil. First of all, we are in search of what we call the democratization of financial services in Brazil, which for us means using technology and innovation as powerful tools to promote financial inclusion, to expand citizens' access to financial services, and to reduce costs of clients in general. Next, please. As I said, this comprehensive agenda is what we will think to make to happen. The main developments in this agenda are an instant payment system, an open banking approach, and a central bank digital currency. Those three projects are setting the foundations of a more efficient and more client-friendly financial and payment systems. The results are already being materialized in delivering value for citizens, but they will deliver their full potential over the next few years. Next, please. It's important to set clear that before those movements, Brazil already had previous infrastructure and digitalization that enabled this initiative to be carried out. Internet and smartphones use have surged over the past few years, even for the lower income brackets. Today, Brazil has more smartphones than inhabitants, and they use them heavily to access the internet. Next, please. In this environment, the BCB's agenda found a good ground to grow. The use of smartphones for financial transactions were high, even before the release of PIX, our instant payment system, in November 2020, and skyrocketed since then. Next. The development of PIX was very complex indeed, but its use is quite simple. In fact, the simplicity and convenience are two of the key factors of success of PIX. Here I want to highlight something that is common for all three projects, the client-oriented approach of the solutions. Beyond the search for efficiency and stability to the financial system, most of all three projects were carried out to deliver value for clients. We spent a huge amount of time of our time during development and implementation phases to make the best products that we could for Brazilian citizens and clients. As a result, PIX is fast indeed. It takes a few seconds for any transaction, and it runs in a 24/7 basis. It's free for clients, and it charges a low and very competitive fee for companies. It's also convenient for companies as it is easily integrated to market automated IT solutions for selling or for cash management. And as an open environment, PIX transactions can be performed by any player that complies with its rules. And it counts on robust security feature for transactions. Next. Next, please. Okay, thank you. To achieve, I will pass fast for this slide, but to achieve and keep growing the success of PIX is essential to evolve over time. Here we can see a few deliverables since PIX release. Some of them focus on client experience, as integration of client's phone book to the bank app to reduce the number of clicks to send money for a contact, or the feature to schedule future transactions, or the possibility to use PIX to withdraw cash with no cost at any commercial store that offers this service all over the country, or even to the facility to initiate transactions in any bank where the client holds account using a third-party app. Other set of developments enhance the security of the tools as a precautionary blocking of suspicious transactions and a mechanism to speed up the refunds of victims of social engineering-based scams, for example. Next. As a result, PIX is widely adopted by people, companies, and governments and keeps going up. PIX has already reached 2/3 of 210 million Brazilian population and 80% of the 170 million Brazilian adults. Next, please. PIX surpassed 1 trillion transactions in the second semester of 2022, and the amount of transactions are still going up. Next, please. In terms of financial inclusion, more than 4 million Brazilians joined the financial system after PIX, and 71 million PIX users were people who had not used other digital money transfer methods before PIX release. Next, please. Well, Brazil is committed with the G20 agenda to improve cross-border payments to address their high costs, low speed, limited access, and lack of transparency. And we foresee the internationalization of PIX as an enabling tool to contribute to this endeavor. The PIX technology is replicable, and we are talking to 4 interested Latin American countries nowadays to help them to develop similar instant payment systems on their own, which will be easily integrated with PIX in the near future. Next, please. Well, maybe this is the most important slide of the PIX presentation. The road for PIX success was not free of bumps. At first, large banks resisted PIX adoption as they were afraid of the impact in their market share. We addressed that concern, bringing them to the game in a large and permanent forum to guide the evolution of PIX, where they have vote and voice. On the other hand, PIX is mandatory for a large set of participants that represents more than 98% of clients in the financial system. But it's worth to say that 2.5 years after PIX release, banks see it as an enabler for new financial products and for the expansion of the financial market itself. Communication is a key for the success. The population have been hit by a massive campaign by the time PIX was released. The banks were part of this effort, and the press embraced the PIX as it quickly became hot news. But people also must be kept informed on PIX developments, and even for bad news, as in an effort to react to all the buzz of PIX on social media. Next, please. Once the flow of money has been made easier with PIX, Open Finance came to do the same for the flow of personal and financial data of the clients in order to give them a chance to extract more value from the system. This is a classical open banking approach to promote competition, foster value, and to harness the huge amount of clients' data to return them value. Next, please. Brazilian Open Finance model is a benchmark now. It's the largest in scope and the numbers of institutions involved. Besides competition, innovation, and efficiency, we've considered Open Finance is also going to be a way to promote financial inclusion. Next, please. It follows a phased implementation. You can click 3 times, please, to fill in the, okay? Thank you. It follows a phased implementation from personal data sharing in phase 1, followed by financial data in 2. The third phase is to allow clients to initiate a financial transaction in Bank A using an app of Bank B or from a third non-financial party, always based on client-specific authorization in compliance with Brazilian personal data protection law. Finally, phase 4 will encompass other regulated markets as insurance, pension funds, investments, and also foreign transactions. Next, please. There is a lagging in Open Finance adoption comparing to PIX because it's more complex both for implementation and for client understanding of potential value, but we already have some impressive figures as 33 million clients consent for data sharing, 800 million weekly data transfers, and 21 payments initiation services providers already on board. Next, please. As PIX, the new features are being offered by participant institutions such as financial management assistants that consolidates clients' data. Additionally, several banks now recognize the data shared through Open Finance allows the development of better credit and pricing models. And next years are promising in terms of new solutions based on Open Finance. Next, please. It's fair to say that the Open Finance road is even bumpier than PIX 1. And the Open Finance approach suffers from 3 problems. First one, governance. Who will take decisions and how voting powers are distributed among big and small participants? The central bank maintains several groups in a forum. In this forum, voting power are shared in order to foster competition and innovation, not to reflect the current market share or power. The second problem is cost sharing. Who is going to pay for the costs? Small banks demand a lot of information from big ones, and competition will struggle if they have to pay a high cost for that. This has been a great discussion, but the scheme for cost sharing was carefully designed by the central bank. And the third one is the security IT concerns. Bank A may be uncomfortable to share data with or to accept a transaction for a smaller and less technological bank B, for example. We solved that setting technological patterns to all participants must comply with. But there is no one-size-fits-all on this approach, as well as in PICS, and the approach must be defined by the regulation in each country. Sorry, I run out of time. Can I take 2 more minutes to pass from the CBDC? Okay, thank you very much. Next, please. Very briefly, the debate on the CBDC deals with 3 main concerns around the globe. Who issues the tokens, how it will affect the monetary policy, and how it differs from regular bank deposits. Our CBDC solution transforms deposits in tokens issued by the banks, commercial banks, following the same regulatory principles of regular deposits. And they don't interfere with monetary policy as they don't pay interest. But then, which value CBDC will create for the economy, for market, and for clients? That's the question. Next, please. Well, CBDC will support digital smart contracts to bring efficiency to a large set of economic transactions. For instance, it may solve the payment versus deliverable issue involving non-financial economic transactions. For example, when someone wants to sell a car and don't want to pay before the transaction, they want to do the transaction before paying, the CBDC, together with a smart contract, will solve this deliverable versus payment problem. And looking ahead, together with PICS and Open Finance, it will open a large set of doors for innovation. Next, please. As any complex project, the CBDC development is phased. We start internal studies in 2020, open the debate with society in 2021. Next one, please. Tested 9 proofs of concepts in 2022, and we are conducting now a sandbox-like pilot with 16 institutions until the end of 2024. Next, please. Altogether, the financial and payment systems in Brazil will have a very different and better shape in next years. In this system, clients will have a large set of market options to choose not products, but services providers that will fight to deliver them value through different channels. Finally, next one. So in summary, a previous and adequate digital infrastructure enables the development of the future of financial and payment systems, but regulators have a huge role to play to foster this evolution. Part of the job is to use a well-balanced mix of compulsory adoption and convincement. The focus on client needs and value is a key factor of success, as well as integration with IT and non-financial service providers. At last, communication with participants and with the public, as well as the use of powerful brands, do make the difference in the overall outcome. Thank you very much for your patience and for your attention.
Thank you very much, Mr. Mauricio Moura, for sharing your very, very elaborate and rich experience and explaining how PICS has exceeded the expectations simply because they are convenient, they are easy, they are, and as many as 71 million users, if I remember correctly, and also explaining your commitment towards reducing the cost of remittance and others, and also very, very lucidly presenting the importance of open standards and the basics of a DPI approach and the coordination and the need for fostering regulation for encouraging while on the one hand, regulation and fostering innovations, and also the communication, including the financing aspects and coordination. Thank you very much for your presentation. So may I now come to Ms. Yunita Rishmi Sari. The floor is yours, ma'am.
Okay. Thank you, Chanka. And firstly, I would like to take this opportunity also to thank everybody from G20, GPFI has come to the Bali. Finally, we can meet all in persons. And then also thank you for the opportunity to share about our payment system initiative to improve financial inclusion. Even though I think my task is much easier now because Ibu DG Filianingsih has explored a lot in her speech. Anyway, okay, let's start with this IPS blueprint. Let's start with the slides number 2. We are so fortunate that we have this Indonesia blueprint payment system for the 2025. This is basically will become our guidance in developing the digital economic and finance in Indonesia. There are 5 key initiatives in our blueprint for the payment system. Slide 3, please. Okay. Well, the first one is the standardization for the open API, and then the initiative on retail payment system and the high value payment system, and also the exchanges in data and the regulatory reform. Let me start with this high value of payment system initiative. We have the system we call the next slide, please. Yep. We have this high-value payment system initiative. The most notable one, we call it the Bank Indonesia Real-Time Gross Settlement. So this is the significant, plays significant role in processing the wholesale, high-value, and important transaction in Indonesia, including the monetary operation transaction, interbank fund, interbank money market, capital market transaction, as well as the government and the high-value retail transaction. BI RTGS is owned, operated, regulated, and overseen by Bank Indonesia. At the moment, we are modernizing the BI RTGS so that it could promote the financial inclusion by broadening its access and participation, especially among non-bank payment system service provider. And then the second initiative is the retail payment system initiative. The most notable one is the, next slide please, what we call CRIS. Not QRIS, but CRIS. It's a quick response code for Indonesian standard. It's a game changer in digital payment to promote not only digital economic and financial inclusion, but also now we advance it to cross-border connectivity. CRIS plays very important role as an entry point for SMEs to enter digital ecosystem. First, it facilitates SME onboarding to open a payment account in order to accept or make payment with CRIS. This enables SME to enter digital commerce ecosystem, such as e-commerce, social commerce, and quick commerce. And then CRIS also facilitates payment using various instruments or source of fund. CRIS also unlocks access to broader range of digital financial service, and CRIS as a digital payment channel enables more efficient cross-border payment. And based on these important functions of CRIS, digital financial inclusion has been very assistant very much with the existence of CRIS, and so we advance the CRIS into a cross-border CRIS. Next slide. This is our initiative to connect the payment interlink payment with our neighboring countries. Bank Indonesia, Bank Negara Malaysia, and Bank of Thailand have launched what we call the cross-border QR. It is as part of initiative in ASEAN, as part of Indonesia as the chairmanship in ASEAN. With the cross-border QR, consumers and traders in both countries will be able to make and receive payments for goods and services through the QR code instantly. This initiative also in line with the FSB's cross-border payment roadmap that was endorsed by the G20 in 2020. And it will achieve a faster, cheaper, more transparent, and more inclusive cross-border payment while ensuring safety and security. And then we also have another game changer in the retail payment system. We call it BI Fast. BI Fast is aimed to develop a more efficient national infrastructure to accommodate real-time fund transfer at the consumer level. It's available 24/7, utilizing technology standards that are open and interconnected, and real-time settlement to mitigate credit and liquidity risks. And then another initiative we have also to encourage the financial inclusion, especially in the credit area. We call it SNAP. Next slide, yes. The National Standard for Open API for Payment. It contains three features: technical and security standard, data standard, and the government standard or guidelines. With SNAP, the payment API used by industry player will use the same API standard, so it will improve efficiency. It also encourages more sound competition by focusing on the consumer. And then, okay, we still have 2 minutes. Another one that is a very recent initiative that has been launched by Bank Indonesia with the government is what we call Project Garuda. This is what we call it is a digital rupiah or the Indonesian CBDC. It's expected to emerge as a future-proof solution to fulfill Bank Indonesia public policy objective in digital area. So we expect that digital rupiah will then be formulated to guarantee and serve as a digital legal tender for the Republic of Indonesia through the issuance of digital rupiah as a sovereign digital public good, and to support Bank Indonesia in carrying out its mandate in monetary, macroprudential, and payment system in the digital area, and also to support the development of national financial system and the integration of national digital economic and finance. At the moment, the development of digital rupiah is still on the first stage, and which will be initiated with the wholesale digital rupiah. And then it will go to the next step, our intermediate stage. And when the wholesale digital rupiah will be extended to support financial transaction, and while for the final stage, the digital rupiah will serve as a retail digital rupiah. We do hope that this digital rupiah will be an important instrument to enlarge the financial inclusion in Indonesia, considering the vast area of Indonesia, which consists not only islands, but also we have thousands of islands. We have so many people, so we hope with this digital rupiah, the financial inclusion will reach close to 100% in the very near future. We are fully aware that to advance digital economic and finance, not only that we have to put attention on the infrastructure, but also we have to build the people. So that we strengthen our consumer protection policies. We also aware that the digital transaction brings more risk, so that our consumer protections policy aims to maintain a balance and a position between the providers and consumer through the function of the regulation, supervision, education, and consumer complaint handling. Talking about the education and literacy, next slide please. We have worked together with the World Bank to develop this digital financial service educational modules. We will launch these modules very soon, and hopefully this will be our instrument to increase the literacy for digital and also the financials of our people. So we work together with the other regulator, FSA, to disseminate this module and for every segments of consumer, both in the payment system area and also in the financial technology. And also we have this program to increase the digital mindset of our SME. We have this special program for digital farming, so the farmers also aware with the advance of digital technology. And then of course, we increase the digital capability for SME to enter the commercial e-commerce. And then we utilize the digital in financing support also to increase the financial capability of our SMEs that then will be connected to our digital payment systems infrastructures like KRIS, BI-FAST, and SNAP. So, and lastly, the last slide. We believe that the digitalization has the potential, big potential to convert our country to a developed country. So the digital transformation in the financial sector led by the regulator and business shall be able to address the difficulties in the new formal age, will also provide greater benefit to our people. We are optimistic, like the Ibu DG Filianingsi mentioned, with the collaboration of all parties, including the industry, it will result in the achievement of the Indonesia Payment System 2025 vision, which include to bring 90 million unbanked people and 90 million SME into the formal economy and finance in a sustainable and respectable manner. Okay, I stop here. Thank you, Kanchana.
Thank you, Ms. Hari, for your excellent presentation. And I'm sure with the participation, effective participation from MSME and other industry and all the other stakeholders, you will be able to reach your target of development, I'm sure. Definitely it would be. And thank you for explaining so well about your robust DPI approach, including the 5 initiatives, which also explains the standardization of API, then QRIS on QR-based payment system, and then your holistic approach in terms of not only creating the infrastructure, but also creating the literacy and the awareness and the training for that, and your commitment to reduce and cross-border payments, which is very much in line with the GPFI target and the SDG targets. I'm sure that would contribute in the GPFI membership as well as beyond GPFI to learn from your DPI-related experience. Thank you very much. With this, may I now request Mr. Haitham, a Senior Advisor, Saudi Arabia Monetary Fund. The floor is yours, Mr. Haitham. Thank you.
Thank you very much. And it's great to be here, and I would like to extend my gratitude to the G20 Indian Presidency and the Indonesian government for the warm welcome and for organizing this wonderful event. I would not have a presentation for my talk, I think. All right. So in today's digital age, our ability to provide accessible financial solution is more critical than ever. Digital public infrastructure plays a significant role in driving financial inclusion and ensuring economic growth. We are all here because we recognize this impact of digital public infrastructure and its potential to transform communities. In my country, Saudi Arabia, throughout our journey, we have made significant progress toward promoting financial inclusion through the provision of digital public infrastructure. Our experiences have shown the meaningful collaboration and partnership among stakeholders, government authorities, public and private sector, as essential to achieve our shared goals. Digital public infrastructure continues to play a transformative role in achieving a sustainable future and enabling the country to progress toward attaining the SDGs. Our ambitious and far-reaching transformation journey started in 2016 with the Saudi Vision 2030, creating a foundation for change in the kingdom. The Kingdom of Saudi Arabia is witnessing a sustainable development and growth due to implementing its reform plan. Vision 2030 aims to a vibrant society with a strong foundation of economic prosperity, a thriving economy, providing economic opportunities for all, and ambitious nation with an effective and transparent government. And one of the critical components of Vision 2030 is the National Transformation Program, which is established to promote economic growth and digital transformation in Saudi Arabia. The National Transformation Program is closely aligned with the SDGs and includes initiatives to improve digital public infrastructures. The goal is to enhance the quality, accessibility, and efficiency of public services and enable citizens and residents to use digital platforms to interact with the government. Examples of how the National Transformation Program is improving public digital infrastructure can be seen in the e-government program, which is a comprehensive effort to digitize the government services and improve their delivery to the public. It includes initiatives such as the National Portal, which provides one-step shop for all government services and integrates all government services channels into a single platform. With regard to education, Saudi Arabia is expanding access to digital learning tools and resources, including e-learning platforms and digital textbooks. Students across the kingdom can access high-quality digital materials regardless of location or socio-economic backgrounds. With regards to the healthcare, the program aims to improve healthcare delivery through digital platforms like telemedicine and e-prescriptions, which allows patients to receive healthcare services remotely and reduce waiting times and the need for physical appointments. The program also aims to improve healthcare data management through digital record keeping and analysis. As for the fiber optic broadband, Saudi Arabia has invested in expanding the national fiber optic broadband network, increasing the number of connected households and businesses, and enabling high-speed internet across the digital connectivity. Overall, the National Transformation Program recognizes the importance of public digital infrastructure in enabling the growth of a knowledge-based economy and promoting social development in Saudi Arabia. And one practical example I would like to highlight here is Nusuk al-Hajj, which is a digital platform developed to facilitate the Hajj pilgrimage. Hajj is the pilgrimage for Muslims to Mecca, Saudi Arabia, which involves various religious rituals and take place once a year. This year, Hajj will start on June 26th until July 1st. The Hajj pilgrimage is one of the largest annual gathering of people in the world, with millions of Muslims from around the globe traveling to Mecca to perform religious rituals. The platform provides various services such as obtaining permissions, booking accommodation, transportation, medical services, and financial transactions and payments. By using the platform, pilgrims can reduce wait time and focus on their spiritual journey, making the experience more efficient. Nusuk al-Hajj also empowers the authorities to monitor the movement of pilgrims, preventing overcrowding and ensuring their safety and well-being by smart technologies. The platform played a crucial role during the COVID-19 pandemic in ensuring their safety. Nusuk al-Hajj is an excellent example of how digital public infrastructure can address unique challenges such as managing large-scale annual events or public services. The Nusuk al-Hajj platform is one of the several initiatives that the Saudi government took under the Vision 2030 plan to create digital infrastructure to support the country's economic and social development. As for the financial services, the public infrastructure enables financial inclusion by providing access to financial services to serve previously excluded from traditional banking systems. Some of the ways which the infrastructure is promoting financial inclusion can be seen in mobile banking and digital wallets. The government has encouraged using digital wallets and mobile banking to make it easier for people to access financial services, especially those living in rural and remote areas who may not have access to traditional banking services. Also, real-time payments. Implementing real-time payments has made it easier and faster for people to send and receive money. This has reduced the need for cash transactions, which can be difficult and expensive, especially for people who live in remote areas. The national payment system, the Saudi Arabia SPAN, is a secure payment system that connects all bank and financial institutions in the company. This system enables electronic fund transfer, online payment, and other digital transactions, and reducing the reliance on cash and making it easier for people to access financial services. And with regard to regulation, the government has introduced regulations to promote digital banking and protect financial transactions. The electronic EKYC process and electronic signature ensures compliance with international standards and protect digital transaction, making access financial services easier. And for financial education, the government also has recognized the financial education is essential to promoting financial inclusion. It has launched various initiatives to promote financial literacy and educate people about the benefit of digital banking and other digital financial services. And finally, I would like to share some facts and figures representing our progress since we started our journey. In Saudi Arabia, internet penetration is over 94%, and smartphone ownership is 97.5%. Saudi Arabia has moved up the global ranking of mobile broadband speed from 107th in 2017 to the top 10 in 2020 and a second among G20 countries. Riyadh, the capital of Saudi Arabia, is the third fastest city globally in 5G download speed. Rural mobile broadband coverage is now 8.5 times greater than 5 years ago, ensuring 99% of all populated area have mobile internet coverage. Account ownership have reached over 94% of adults aged 15 and above with an active and unique bank account or e-wallet account. The use of electronic payments exceeded the use of cash. And thank you very much for listening, and I apologize for being over the time allowed.
Thank you, Mr. Haitham, for an excellent presentation of your experience, which you have pointed out how DPI can be transformational force in socio-economic development, if I may say. So you have also pointed out the spectacular development in terms of eKYC and also the account ownership, 94%, which is by all standard phenomenon. And also the eKYC, you have shown the perfect example of use of DPI in some of the recent studies by both IMF and World Bank has shown that how eKYC onboarding has reduced the cost of, the DPI approach has reduced the cost from say $20+ to just 4 cents or something like that. So you have just explained your, and also the very important example you have given, the use of the DPI for Hajj pilgrimage, that has excellently explained the use of, multifaceted use of DPI. So therefore, that's what one of the basic characteristics of the DPI approach is, that this ability to provide solutions at scale, which is, thank you for sharing all these experience. These are very, very useful. With this, may I, the last but not least, of course, Ms. Oslim, with whom I very often trust and ask questions to share past history of GPFI. Thank you for your sharing your experience. Oslim.
Thank you. It's my pleasure to be here today and to have the opportunity to address this interesting and promising side event on digital public infrastructure. I would like to thank the Bank Indonesia, the Indian Presidency, and the GPFI co-chair for organizing this event and hosting us. I will be sharing information about our payment ecosystem, our instant payment system, what we have done so far and what we are planning for the future. Next slide, please. I want to start with payment ecosystem and Central Bank of Republic of Turkey payment systems. As you can see, we have CBRT payment system with 3 main components. And also in the subsection of the slide, there are other payment infrastructures like Takas Bank clearing system and interbank card center netting system. But CBRT systems stand at the core of the market infrastructure. In CBRT, we have electronic fund transfer system for interbank payments, electronic securities transfer system for government bonds and securities, and retail payment systems for payments initiated by customers of the participants. So this was the picture before I introduce our instant payment system. Next slide, please. The key challenge and the basic need of the modern era is to make payment systems available for individuals and legal entities everywhere and at any time, and also to complete full settlement of transactions at the moment of payments for 7 days, 24 hours. From this point of view, the main goal for us is to help our nation achieve its less cash society by promoting a payment ecosystem that enables making and collecting payments anywhere, anytime, immediately and efficiently. Introducing the FAST system was the initial and inevitable step of our vision. Next slide, please. In this way, we created a base infrastructure to enable the desired environment for payment ecosystem. Next, please. So with these objectives in mind, in November 2019, we started developing our instant payment system with our own resources and went live at the end of 2020. So it took us a year and a few months to go in production. Next, please. FAST has 3 fundamental properties. It is instant. Payments that are not completed in 25 seconds are cancelled due to timeout rule. Actually, the average end-to-end execution time is now less than 1 second. It is, of course, operates 7 days, 24 hours with no breaks, and participants are required to notify their customers. This is our base with 3 main features, and now we are adding the overlay services over the core infrastructure. For the overlay services, we have proxy addressing database. It's easy addressing service. We allow QR payments as an overlay service. We have security overlay service for preventing of fraud cases. And we are planning to add some other overlay services, such as request to pay service and escrow overlay service in the near future. So next slide, please. Continuing on properties of the FAST, we can say that mostly P2P and P2B credit transfers are made. Although there is no restriction on the other types of payments, such as B2P, B2B, the upper transaction limit, which is very low at present, it's 20,000 Turkish lira, creates a natural barrier to those payments. As the limit increases, those payments will be included by itself. We target not only banks to participate to FAST system, licensed payment institutions are also eligible to participate in. Next, please. With the easy addressing system, users can transfer money by matching their accounts with easy-to-remember addresses. This service allows quick, easy, and secure initiation of payment orders with only an easy address instead of IBAN. 5 different easy addresses can be used: mobile phone number, email, national ID, tax ID, and passport number. Next, please. If we look at where we are for the QR payments, we published national standards to have a common language and rules for ensuring interoperability, security, and unity. We believe that this will pave the way for innovation and fair competition in the ecosystem and help us to achieve our goal to have a less caste society. In FAST, we have 2 types of QR code payments: merchant payments and peer-to-peer payments for now. For merchant payments, QR code is presented by the merchant, and it can be static or dynamic, and the standards are compatible with EMV standards. In P2P, the payer offers his account information in a TR QR code to the payer to make person-to-person fund transfer. Next slide, please. So going through an example of a successful payment flow, we have remitter and beneficiary customers at the end sides and their banks as the participants of the system. The transaction is initiated by the remitter when he gives a payment order to his bank. Remitter can be using different type of channels when he is giving the order, but mostly used payment channels are mobile banking and internet banking. After required checks, sending participant creates and sends instant payment messages to the system by debiting the remitter's account. System validates the message and then concurrently routes it to receiving participant by putting the message in the reservation queue. Receiving participant sends an acceptance message to the system. System settles the transaction and sends confirmation messages to both participants. So sending and receiving participants notify their customers, so remitter and the beneficiary. So this is the successful flow. If you look at the overall transaction flow, you can notice one key difference than a traditional payment system. That is, the receiving participant has to send an acceptance message after checking whether the receiver account is appropriate to accept the payment. So both parties, sending and receiving, involves in the flow. Next slide, please. So when we look at the statistics, 24 participants are registered in the FAST. System currently executes 8.3 million transactions in a day, valued to total of 21.8 billion Turkish lira. There are about 20 million registered users in proxy addressing database. The system is considerably fast, completing an instant payment transaction in 0.3 seconds. And we have also low timeout and rejection ratios. Next slide, please. From our perspective, there are 4 important categories to create a successful growth story. First of all, it was important to touch people in their daily life. So having a chance to make payments in the midnight to a taxi or to send the rent payment at the weekend created an awareness among society. Also, receiving a notification when people make a payment increased the awareness of the FAST system. On the other hand, participation is not mandatory for any payment institutions, but there is growing demand from customers, and non-bank access create a competitive environment. So a lot of banks and non-banks prefer to join the system for meeting the demands from customers and adapting to the market. For the cooperation side, from the beginning that we start analyzing and designing the system, we created working groups with banks and also with the Interbank Card Center, BKM. This helped a lot in determining basic needs, guiding our design and creating a strong system. Lots of banks made informative advertisement to increase the use of the system. They open mostly all channels from ATMs to mobile banking for fast transfers. Some put special menu for fast in their banking applications. So all these efforts increase awareness and use of fast. And also overlay services are the strong side of extending the reach. They make payment initiations easy and safe for customers. So next slide, please. So with this roadmap, we expect from 2023 is that usage of instant payment system will increase with open banking services, non-banks participation into FAST, and developing new overlay services for the ecosystem. So thank you very much.
Thank you, Özlem, for sharing your payment, CBRT payment system and the fast payment system. In fact, the fast payment systems is an important element of DPI approach, and then the way you explain, it is really real-time basis. A matter of few seconds, the fund is transferred, and which has its own advantage that can have multiplier effect in terms of productivity and also ease of doing business and reduce the cost significantly. So one of the objectives of this whole financial inclusion is that not only include them, but also ensure that the included people and entities remain in the systems. If there is efficient and fast payment systems are there, so that there are additional advantage that these people remain in the system, use them and benefit out of the DPI system, and ultimately grow and attain the higher level of growth and inclusive growth, and finally the development. With this, thank you very much for sharing your experience. So now let me go to the next session in terms of next item rather, not session, that questions. If I may open the floor for the questions. For the interest of time, maybe we'll take only a couple of questions. So I would request when you raise questions, please identify yourselves and try to be precise when you ask the questions. So please take note of it, and the floor is open for asking questions. Over to you. Yes, I see one hand here.
Thank you so much. My name is Kamya Chandra. I'm with the Center for DPI and also an advisor to India's Ministry of Finance on the topic of DPI. My question is to Mr. Maura. Could you highlight, I saw online that there are some 300 participants, let's say, in the PIX ecosystem alone. So could you highlight how, explain how the central bank worked to create that interoperability across both fintechs and the banking system in a wider way to scale up PIX access? Because I think that's very interesting and something that necessarily not many central banks have done. So that would be wonderful to hear. Thank you.
Well, thank you very much for the question. In fact, when PIX came, the fintechs in Brazil were already big players in the financial system. So digital banks and new entrants using technology to provide services. For example, the biggest credit card in Brazil, not the biggest one, but one was the top five, is a fintech in Brazil. So they also had a lot of clients when Pix came. So Pix is mandatory for those huge financial companies in Brazil, including fintechs and digital banks. So there's some kind of not that easy to put them into the system, to put everybody on board, but we had to use a lot of convincing power and some moral suasion to make them inside, to bring them to the boat. So there was an interesting case that one of top 5 large banks said us, well, you are doing or going over your mandate. I don't have to do that. I don't want to provide Pix. I won't do that. And we said, well, okay, we see each other in the justice court, and let's discuss there. And then nowadays, 2 years after the Pix launch, this very same banker tell us that Pix was the best thing that happened to them to provide the best financial service, and his bank market share nowadays is bigger than it used to be before Pix because of Pix. So it's hard in the beginning to put everybody into the system because they are very concerned about, well, I don't know what's going to affect my market power, my market share, but once you put the game on, things go well.
Any other questions? Yeah, I see one hand below.
Hi, this is Prerna from UN-based Better Than Cash Alliance, and so good to hear presentations from the member countries. My question is to Ibu Sari from Indonesia. Very heartening to see how you're working on digitization of MSMEs, and you talked about the e-farming initiative. Generally, the experience is that while agriculture requires a lot of digitation, but it's a very challenging task because farmers and other participants in the sector find it very challenging at times to adopt digital and also be comfortable with it. So it requires a full ecosystem approach. So would like to hear a bit more about how you made it happen and if any lessons that you have to share with us. Thank you.
Okay. Can I answer directly, Chankan? Excuse me. Okay. Anyway, okay, so we developed this digitalization for farming. It's from end to end. So we do the pilot project, and we invite the farmers in a specific area with the young farmers, mostly young farmers, and they are familiar with the digital instruments. So, and then we try, because this is a pilot project, we have to make sure that it will successful. So we try from the end. So basically, it's to link this market to e-commerce. So, and then when they see that it's worked successfully, and then so the e-commerce they accept all the farmers' products consistently, and then they can communicate very easily. So then we go to the beginning. We try to intervene the digital, production phase. So we introduce the system that can, that based on the internet, so Internet of Things. So it can inform the farmers when, and especially when to start the cultivation. based on the AI, based on the data from the histories of the weather. And then, so previously, farmers is only based on the normal calendar cultivation period or system. So it's like in March, they have to start cultivation. But then we introduce this system based on the calculations of the recent history of weather, which condition, which is very extreme lately. So, and then when they follow the instruction from the, based on the data from the internet, and then it works very well, so they start to do it themselves. And one group of farmers can practice it successfully, it will be followed by the other group. So start small, but make sure that it will successful. So then, yeah, other farmers will follow for voluntarily. Yeah, I think that's the key success. Yeah.
Thank you, Sari. I think we still can take one or two more questions. Yeah, I know everybody is hungry. I see a lot of industry participation, or any last questions maybe? No? Okay. Okay. So I would, before this thing, I close this session, I want to thank Bank Indonesia for organizing this very enriching event and experience sharing. And this has the insightful discussions that we have just had, which amply exhibits that the development and enhancement of digital public infrastructure can contribute and as a key driver to productivity gains and advance financial inclusion rapidly. And by leveraging the power of DPI, we can create a future. That future will provide a situation where nobody will remain behind. So with this valuable insights we have got, I wish to present whatever discussed. Tomorrow I'll get the opportunity to share these key insights tomorrow. The membership to have informed discussion on the leveraging DPI for advancing financial inclusion and productivity gains. With this, let me hand over to the comparer. Thank you. Thank you, everybody, once again, here in the panelist. Yeah.
Thank you. Please give a round of applause for the moderator and all the speakers for today. Thank you for the insightful discussion this afternoon, and you may return to your seat, please. Do you want a photo session? Another photo session? Excuse me? Oh? Do you want to have another photo session? Okay, please. Welcome. Okay, on the count of 3. 1, 2, 3. Once again, give your best smile. 1, 2, 3. Thank you, thank you. Once again, please give a round of applause for our moderator and our speakers for this afternoon. Ladies and gentlemen, finally we have reached the end of the Global Partnership for Financial Inclusion Symposium. And we certainly hope that this event will generate a positive ripple effect towards the advancements of digital public infrastructure that could promote financial inclusion and achieve inclusive and sustainable development goals. I'm Dinantiar Anditra on behalf of the organizing committee. Would like to thank you, all of you, for your participation, and we invite you to enjoy lunch that will be served at the cafe at the 5th floor. And we also invite all GPFI delegates to enjoy exciting activities such as batik painting and angklung class at the foyer area. Also, allow us to invite you to kindly check out our MSME's booth, and it presents various kind of Javanese, Balinese premium products by Bank Indonesia's fostered MSMEs. Enjoy your lunch and have a pleasant time participating in the remaining activities. Hope to see you soon. Wassalamualaikum warahmatullahi wabarakatuh. Om Santi, Santi, Santi. Om. Thank you.